seminars. Uh, Blue Sky seminars are our way of interacting with the people in working in the field of social impact, social development. And we are very, very privileged to have Rakesh ji with us today. Today's topic of discussion is on the social stock exchange. Social stock exchange has been functioning for the last almost 2 years, but this year is going to be critical because it's coming of age. In terms of the number of people who are interested in social stock exchange, whether it be an investor or whether it is for profit organization or whether it is a not for profit organization. So today, this 1 hour that we are going to spend, we are focusing on what are some of the important things that you need to know about social stock exchange as in 2025, because there's a very steep learning curve that is happening. Social stock exchange is learning as it goes along, and there are some very important developments which are happening this year, which is what you need to we thought it would be interesting to discuss this in that 1 hour webinar series. So today we are also very privileged to have Rakesh ji with us. Rakesh ji is one of the first, he heads an organization called ESG Pro, which is one of the first organizations which got registered with the ICMAI. ICMAI has a social auditing organization, and he was one of the first organizations which was empaneled to do social audits for the organizations which have been registered on the social stock exchange. Yeah, so we're very privileged. So we have kept this very interactive. We have Rakesh ji who's going to be speaking to us, and we have opened up another session for questions and answers. So feel free to ask. You will not get another opportunity like this to ask questions out of the expert. So make use of the whole opportunity. Before I hand over the session to Rakesh ji, I just wanted to introduce Blue Sky. Blue Sky CSR is an organization which is also working it's mainly working in the CSR space. So while we also do impact assessment, we are also helping a lot of the not-for-profit organizations to sort of get ready to be listed on the social stock exchange. So we do almost a holistic level of service where CSR is concerned, in terms of not only the social stock exchange, but also in impact assessment, also in due diligence, also in planning out how you talk about or how you design a social CSR project which is focusing on social impact. There's a huge amount of learning to be done in this field, and we would really look forward for further discussion on it. I would also like to say that Blue Sky CSR is a part of a larger organization, in Muto Consulting, which has got two more organizations called Coach to Transformation and Mirag. So please do look into our website, and let's see which all topics we can take up for discussion. Yeah. With having said this, I'd just like to put it in context before I pass it on to Rakesh ji. Now, social stock exchange, I'd also like to let you know that most of the people who are attending this program are coming from a not for profit organization. Most of the organizations are from the not for profit sector, and so we have geared this very much for your requirement. And so, one of the new terms that I would be introducing, or we would be introducing and discussing in this session, is what we are calling social impact investing. So, this is a new term that you would be hearing, and what it basically means is now financial investment. We were very comfortable with understanding the financial aspect of business. Like we have a very famous chartered accountant. Rakesh ji is a chartered accountant. He'll tell you about how the financial audits have been done. The world has a lot of knowledge on the financial auditing part of it. But when we are talking about social impact investing, we are not only looking at the financial audit or the financial impact, we're also looking at social impact, social and environmental impact. So what this does for the not-for-profit sector is it literally makes it moves it away from a peripheral business decision to a very central business decision, because now the boards, the organizations, whether it is for business or whether it is a trust or a foundation, or whether even if it is a retail investor, like the way we would invest in the stock exchange, now retail investors like you and me would like to invest in organizations like yours when we believe a cause. Yeah, when we are interested to say that I'm not only interested in looking at my financial returns, but I'd like to invest in a organization where I can also look at social returns. So this is going to be a game changer for not-for-profit organizations, because for the first time, I think business is recognizing, is moving away from just giving grants, or just organizations are moving away from philanthropy to saying that I will invest in an organization which is making a social impact. Yeah, it's moving away from that. It's a new change. And I would request most of the NGOs to sort of acknowledge that it's becoming a time for, you to be talking that language, where you would be talking the language of impact, so that it becomes very relevant to the organization or the people who are investing in you. It asks for a lot of accountability and transparency. It requires the social, what do you call, not for profit organizations to increase, or update their skills in communication and be able to resonate with the language of the corporates. And that is what we are going to be discussing in quite great detail in the next 1 hour that we are a part of this webinar. Just wanted to tell you, we have about 14 organizations which have raised about 12.2 crores on the social stock exchange, but there are much bigger organizations, much higher number of organizations, almost 100 plus organizations, which are registered on the social stock exchange. Yeah. So do ask Rakesh ji when he's ready to find out the difference between listed and registered. Very important to understand what listed requires and what registered and bodies need to do. Rakesh ji, you're ready?
Yeah, I'm ready, ma'am.
Yeah, over to Rakesh ji. But before I give this hand over the webinar to him, I'd like to introduce him. It's my pleasure to introduce Rakesh Tayal, and he is a CA by profession, and he's a founding partner of ESG Pro Consultancy in India, which, like I stated before, is one of the first firms enrolled with ICMAI. That means this ESG Pro is an entity which can do your social audits if you are listed on the social stock exchange. Yeah, he's been a chartered accountant, and that's what I like. That's the perspective I really like that he brings into it, with over 2 decades of expertise in finance, governance, and sustainability. These 3 points are becoming extremely important as India becomes a mature economy. And Rakesh has been actively assisting NGOs and social enterprises in registration and listing process, and conducting independent social impact assessment. His work ensures transparency, accountability, and measurable income in social sector. This is extremely important, and I'm sure all of you from the social sector are now, like there's a lot of expectation from you on accountability, transparency, and measurable outcomes. Rakesh ji is also a regular speaker in various national forums on impact assessment, CSR, and ESG practices. And we will be looking forward to hearing his views on some of the important aspects of social stock exchange that you need to know in the coming year. Over to you, Rakesh ji. Thank you so much. Yeah.
Thank you for
Yes,
your time
please.
and sorry for the inconvenience at the
Not at
beginning
all.
only.
Not at all. Please
Yeah,
feel
but I
free. Yeah.
hope that next 30 minutes of will be engaging one. And for the development sector, it may be the new era only, which is coming on the social stock exchange, which is going to change the history and also will be a milestone to achieve the social development goals. Being the NGOs now are no more just a charitable organizations. They are looked at the developing the economy. They are the economic partners also. And that is the whole concept which is required or which is coming from the social stock exchange. In the next half an hour, I'll try to explain more on the background of the social stock exchange, the need of the hour, and why it is important, and some misconceptions about the stock exchange and the with the NGOs, what are normal questions they are coming up with. That also I'll try to explain, and at the end I'll try to satisfy all your queries to the extent the limited knowledge I have. Jyotsna is having the development sector and being as you mentioned, being a financial sector and the chartered accountant by profession, it might be a good mix for all of you to have both the sectors today here. Because the stock exchange is something a mix, need a mix of the both the sectors. With this, I want the permission from Jyotsna to start the
Sure, sure.
session.
Please, Rakesh,
Thank,
go ahead.
thank
Yeah.
you. Any questions, you can please park that in the chat box or for the question answer session. Meanwhile, so that we can go with a flow. And then in between, if you have some questions, you can raise your hands. I will answer the queries in between also. So today's session is basically to have the journey, what is the need for the social stock exchange in India, and how the NGOs and social enterprise can leverage the social stock exchange. Then the social auditors, which are now known as the social impact assessor, that there is a strong representations from the development sector. They fear from the word auditors. So they have changed the auditor word to impact assessors last year only. Uh, and then compliance and what are the challenges and how to overcome them. That also we will try to find out the solution. As we all know, that India got independence in 1947. Before 1947 era, the profit is the main motive of the Britishers and every industrialist. There is nothing, something like that, there is profit era. Now the concept changed, then the people, planet and profit conceptually. And the story has been come up in 1987. The first time the sustainability word used, because that background I am telling you, that is the basics for the social stock exchange, the history, the era. So in India, we know the social sustainability decades or the generations before. But now, because the globally it is developing, there is a global force which is bounding the nations to come up with the solutions and the sustainability. Now it is getting the edge. Everyone is talking about the sustainability nowadays, and that is the background social stock exchange comes into the picture. In 1987, the Brundtland Commission defines the sustainable development. The story starts with that when the world waking up. India has woke up long before, but in an unstructured way, unorganized way. And now the demand of the hour is to have this sector also as an organized sector. That also I will cover in my next slides. So 1987 to 2000, 1997, the 10 years, first 10 years are the waking up period when the things have been started in the sustainability thing. GRI framework has been launched in 1997. 2001 to 22, that is the era when regulatory requirements come into place. When IPCC has been introduced on the climate change, then Ellen MacArthur Foundation has been launched in 2015 and 16. That is the historic year where all the 193 nations signed the agreement. And they have taken the measurable targets. The 2030 agenda they have signed, all the nations have signed. So whatsoever we are looking at the government, Modi government initiatives, whether it is the clean gas, Swachh Bharat, affordable city, smart city, affordable housing, smart city, all are the part. If you when we go further, you see all the government schemes are made or aligned with these SDG goals. Government needs a huge fund to meet out these promises, what they have thought that they have to complete by 2030, because this is the first time they have given the measurable agenda, the measurable impact by the NGOs or the corporate sector. By whatever mean, we have to achieve it. And by only corporate sector, it is not possible to achieve, at least in India, who are very, very high in the giving index. So 2018 to 22, that is the regulatory requirement period. And as Jyotsna ji mentioned, this 2025 is a game changer. Why? Because in 2022, we have get the social stock exchange. first 3 years are the trial run periods. Now there are 115 NGOs who are registered over the stock exchange. 13 NGOs have already got the funds, raised the funds, and make the regulatory compliance also. The day will be there when NGO will be recognized today. You agree with me? It can be an interaction. So you agree with me that your credibility is normally known by the ATG or FCRA registered company. Are you in agreement with me or not? You can type in the chat box. Mr. Manoj mentioned आवाज नहीं आ रही है. Am I audible ना ज्योत्सना जी?
हाँ बिल्कुल, I can hear you very clearly.
Yeah, okay, great. Yeah. So you were yeah. So it mentioned Ashwini ji mentioned yes, right? Ashwini mentioned. So your organization is known for the credibility when you have the ATG certificate or the FCRS certificate. You have an edge over this. Nowadays, your organization will be recognized or have the credibility whether you are SSC registered or not. More transparency. Your project will get the weightage when you will go with someone to someone that this is the project we are coming with. We are answerable to the public. Now today the donations are made on the face value. That if we know Devi Kalaji or Shita Lakshmi ji, so we know them, then only we will give. They have the connects in the corporate, they will give them the CSR. Your visibility will increase. I will come when the benefits will discuss what are the benefits of registration. The major benefit is that your credibility is going to be come up with the social stock exchange, registered whether you are registered or not. So 2025 is the era when the misconceptions, trials have been done. Social organizations has to come up, take a lead, and make the advertisements and go to the crowd to get the funding. And those who move early, they will have an edge, definitely. As a chartered accountant also, if you see in the corporate sector also, from 2016 to 2023, this is a EY study. Earlier, the annual report section, the investors are reading the financial data, balance sheet and profit and loss only. But now if you see, they have the integrated reporting. Integrated reporting means they have to give the BRSR reports, they have to give the CSR impact assessment report in their annual report. So it has been made mandatory for some of the listed companies who have annual spending of more than 10 crore rupees and individual project of rupees 1 crore, that they have to publish the impact assessment report of their project in their annual reports. And that expenditure is also allowed as the CSR to the companies. Investor focus has been changed. You see, 27% of the investors earlier focused on the non-financial elements. Now 72% of the investors look at other than the P&L and balance sheet items. So that is the impact financing which is going to change the corporate sector. Being Jyotsna told that most of the audience here are the NGOs, but I am giving you a context that whether it is the NGOs or for the profit enterprise or not for the profit enterprise, the shift of the investor has been changed. If the donor towards the more transparency has been changed, the more educated we are, we will compare the two NGOs working both in the education sector, who is bringing the project more efficiently. There is a terminology called SROI, social rate of investment or social rate of return. Like you're getting the return of investment on your shares. As a donor, I want to see which organization is spending efficiently and giving more social rate of investment, return on investment. So social return of investment is coming up very good in the impact assessment reports. So more you will give, more donor will attract to you, more crowdfunding can come to you. So this is the requirements, waking up area. This is the NDP that UNDP has estimated India needs 1 trillion per year. As I mentioned, that India has also signed the part of the SDG Pact, which has the 2030 agenda. And there is a funding gap of 560 billion per year. That is the background how the social stock exchange come into the picture. Because government may not be able to mobilize resources and the scale that 45 lakh crore rupees has to be funded to meet the goals. Who are there? There's the private sector, means corporate companies, high net worth individuals, and the social enterprises. They are here. So government has to channelize 360-degree to keep that promise. So this is a historic date, 25th September 2015, where in the 70th General Assembly of the United Nations, all the 193 nations have signed 17 Sustainable Development Goals, and they have the 169 targets in between. So each goal has the target set up, what you have to do. And out of that, in 2017, they have indicated the global indicative framework, which have 232 unique indicators. Unique indicators means one indicator can be duplicated in different SDG goals. So there are 232 measurable unique indicators they have mentioned. They have mentioned 232 unique indicators. So you are the KPI is measurable now. Whatsoever is there, it is measurable. So you have to work in those directions only so that it will directly impact on the economy of the country. How you are contributing. The SEBI has given these, SEBI Act has been amended and they have aligned these themes, the 16, 17, 16 themes, sorry, 16 themes. They have aligned with the SDG goals only. So there are the 17 SDG goals: no poverty, zero hunger, good health and well-being. And India has modified their regulations. They have modified the Companies Act also, where CSR schemes are mentioned in the Schedule 6, Schedule 5, Schedule 7, sorry. Schedule 7, they have modified and aligned it with the SDG goals. Social Stock Exchange, they have amended the ICDR regulations to facilitate the social stock exchange. That these are the 16 areas, and these 16 areas mapped with the 17 goals. Any other area, 17, they have kept as a general item which can be introduced at next time. But the point is, here they have mentioned the primacy of social intent. So all these 16, 17 areas, there should be a social intent there. Now, why these changes have been brought in? There is a good thing that to meet these SDG goals, as I mentioned, we have three sectors. One is the private sector, second is the HNI, and third is the stock exchange. And we need 45 lakh crore rupees per year to channelize to meet these goals. So first, they have captured the corporate by mandating the BRSR reporting, business responsibility and sustainability reporting, for the top 1,000 listed companies. For the top 250 companies, assessment is necessary, mandatory now, and gradually they will increase the scope. So top 1,000 listed companies has to publish the BRSR reporting in their integrated reports or the annual reports. So now by this way, they are capturing the corporates. Then they have the combination of corporates and the NGOs, where they have bring the CSR mandatory, align the CSR goals with the SDG goals. And here they have the partnership of CSR, but still there is a lack of funds because 2% mandatory is there. Then it comes with the social stock exchange, where civil society organizations or NPOs are on the upfront. So this concept has come mainly for the CSOs. Though for the profit enterprises may also come up for the on and be list their program on the social stock exchange through their main code only. They can also come up with the instruments. But so far, this exchange has been given a platform to the NGOs to register themselves, to increase their visibility, to raise the funds for the more transparency. So this is a fact about the CSOs, that 1/7 population of the world is serviced by 1/3 of the world's NGOs in India. So scale of NGOs in India, today there is 33 lakhs NGOs in India, right? But only 1.6 lakhs are registered on the Darpan portal, right? And a few only have the FCRA, only in thousands have the FCRA certificates. So you see the gap of the though, because every mohalla, every locality, there is one organization registered, and you are getting the funds from the known persons. So it's very unorganized sector. We have to organize it. India ranks low in the giving index developed by CAF, that is 106 out of 152. Though at the absolute scale, we are number one, but compared to the population size, we are even lower in the giving index. Right? It's very high, unorganized sector. And this is the code from the CFP data that we know that India tends to be very prompt in giving alms to beggars, and we have owned many stories of rich beggars. The CF data would be obvious of this giving and would not have any means to glean this information. But does this mean that in the giving sphere also there is certain image that unethical practice are in the sphere? Right? Like CAs are also told to be that they are the most one who are channelizing the economy in one way or other. Right. Same way, the general conception of the NGOs is that they are channelizing the funds. But it's not true. With the establishment of social stock exchange, increasing the transparency, all the good organizations will come forward and being the transparent. This is again certain data which look towards the social stock exchange or the civil society organization towards the inclusive growth. We are the third largest economy now and 110 rank in the global national happiness index. So with this perspective, in 2019, that is the 2015, we have the SDG goals, we have the schemes aligned, as I told you. Now the funding still remains short. And 2030, Nirmala Sitharamanji has given the speech, which is the extract here, that it is time to take our capital markets closer to the masses, and meet various social welfare objectives related to inclusive growth and financial inclusion. Here, we have to reach to the masses and social welfare objective to be achieved. And for this purpose, electronic fundraising platform Social Stock Exchange has been to be established, where the social enterprise and voluntary organizations who are working towards the realization of welfare objective can raise the capital as equity, debt, or units. So this is the first time when finance minister spoke about the social stock exchange, and this comes true in 2022 when social stock exchange formally established in the both the exchanges as a sub-segment of National Stock Exchange as well as the Bombay Stock Exchange. Both are the main exchanges. We have a segment there to utilize their structure, to utilize the infrastructure of both the exchanges which are currently established. We have there, so like we have the stock exchange for SME, MSMEs we have separate stock exchange, AS is separate stock exchange. Same way, SSC is a sub-segment or set up in both the exchanges. As of now, 133 NGOs are registered with the social stock exchange, right? Overall, unique can be, I think, 70. Yeah. Okay. So these are the 133 with the NSC and 90 with the NSC and 43 with the BSC. So total 133 CSOs have been registered. 13 NGOs have raised the funds. Unnati Foundation is the one who has raised the fund twice. So they brought up two projects and they raised the fund twice. That is success story. We will discuss this also later on. The Unnati Foundation who has raised the funds, they are the first one to be listed on the stock exchange. The financial instruments have been notified, zero coupon, JLC-ZP. These bonds we will discuss in detail. Zero coupon, zero principal bond means that they need not to repay the interest nor the principal amount, but you will get an instrument in your demat account. And they are the social impact assessors who has to pass out the exam conducted by SEBI, and they have to empanel themselves with one of the self-regulatory authority, like with the ICMAI or the ICSI or the ICAI. These three are the regulatory bodies which are the professional. One is the chartered accountants, one is the body of company secretaries, and other is the body of post accountants. All these companies have formed, institutes have formed their Section 8 companies who will regulate the social impact assessors who have cleared the exam conducted by SEBI. And to conduct the impact assessment, there should be a firm. It can be a proprietorship firm, it can be a partnership firm. In your individual capacity, you cannot issue the impact assessment report. And you must have 3 years of experience of development sector. That is a condition to register as a social impact assessment firm. So this is the progress so far. So these are the benefits to register on the social stock exchange. As I mentioned, we need the gap. As we know that everyone knows that today's your credibility is known by the ATG or the uh, FCRA certificates or by your connects in the corporate, right? But how you will known by Indian, how you will reach the masses? This stock exchange is the platform that you will reach to the masses. So you will have the access to the capital, ensured funding. You can bring up your project of rupees 50 lakhs as low as 50 lakhs rupees and as high as you can think of. And as many as project, one IPO for each project. So you can take 3 projects in a year, 5 projects in a year, go to the exchange, raise the funds for that project. More credible you are, more the people will give. And I'm giving staying ahead of my presentation, but a major question which is coming from the NGOs, साथ पैसा भी मिलता है क्या? तो इसको मैं ऐसे ही बताऊंगा. I will narrate this like this, summarize this, that when a company coming with an IPO, who is giving me the return also, right? You are giving the social return. So people who need the satisfaction, right, by serving the society, who need, they will come to you. Number one. So people, I'll compare it with a financial IPO with a social IPO. So financial IPO, people will come up, those who are getting the more return, having the more credibility. Reliance IPO may be successful, Tata IPO may be successful because they have a proven ability. They are transparent. Their governance is good. That's why I am subscribing their IPO. There are IPOs who are getting failed also, right? But people will, the IPOs are oversubscribed. So a day will come when the IPOs of the good NGOs who are more transparent, who have known, they can be filled up in minutes. They will be oversubscribed. Today we are struggling. We are saying paisa milega kya? So today it's an awareness to be brought out among the investors. You can reach. So wider reach should be there. You have surety of the funds. Once you list on the stock exchange, you have surety of the funds by mere registering also on the stock exchange. You can reach out your corporate partners like a TG certificate. You can say, if we are registered on the stock exchange, sir, we are answerable. We have to issue our impact assessment report. आपको चाहिए या नहीं चाहिए? We have to publish our impact assessment report on the stock exchange of all the projects going with us. Right? It will increase your credibility. Visibility will increase. Once you have stock exchange registered, then your visibility will increase. The benchmarking standardization will be there. If two NGOs working in the same sector, we can compare both of them, who is giving more social rate of return, who is giving more impact on the society. Your governance will automatically improve when you are answerable to the masses. Your efficiency will improve, and most important, this is a combination of challenges which you are facing nowadays. The talent is not coming to NGOs, right? But what if your NGO is registered or listed in the stock exchange, known in the India, that you are working for XYZ, the Unnati Foundation, no one knows, I believe, at least I don't know before they listed the 2 projects. Now I can say, okay, someone is working in the Unnati Foundation, maybe a CF4, my friend, he is doing the great job, he is working for a good organization. So you can be, the people who are working for you, the name will be known to the masses and they will feel proud. You can attract the talent at a reasonable cost also. The accountability can be fixed. Then this is the registration benefit and listing on SSC benefit. But I mentioned that you can bring a project as low as rupees 50 lakh rupees. Now, what are the changes in 2025? I read the agenda. Jyotsna mentioned that how 2025 has changed the scene. So one, that trial period has gone when his NGO has been registered. Now the time is to change. Stock exchange also come up with the changes. They now allowed the retail investors also to subscribe rupees 1,000 to apply in your project as low as rupees 1,000. Right? And you can bring as many projects as you want. They have reduced the limit from 1 crore rupees to 50 lakhs rupees per project. They have given this also the facility. So these are the two major changes they have made. 1,000 is the big change. Earlier they are not allowed. Only the HNI or institutional investors are allowed. Now they have allowed the individual also to subscribe to your JRC bonds. So you can bring up the project. You have to market that project because a company in the financial IPO they are also marketing their project. They are also marketing the IPO. Same way you have to bring out. Once your name, I understand you don't want to spend much, right? Because you want to spend more on the social activity or directly on the things. But see, if donor is ready to pay, because the expense of raising fund you can reduce from the project cost itself. They have allowed it. So if you are raising 50 lakh rupees, you can reserve 5 lakh rupees or 6 lakh rupees or 7 lakh rupees. Whatsoever the cost of the fundraising, you can reserve it. And then you have to give the breakup also that this much is the admin expense, this much is the expense which I'm going to uh, spend on the project or spend on the ground. So you have to give all the breakups in your FPO. Is some that's why the beauty is if two IPOs are coming of the same field, I can compare who is more efficient and I will subscribe that time. So now it is no more going to be the face based donation or the connect based donation. Now your performance will be measured. The impact investors will come to you. The companies will give. Now proposal is also coming just to promote this also because earlier the proposal is not there, that CSR is not allowed. Whosoever is subscribing to your projects or to your IP, this fundraising, the projects, they will be allowed ATG deduction only. So CSR is not allowed. So if corporate is subscribing your project, so CSR is not counted. CSR has been kept separate. Now in the ministry, some work is going on where they are accepting this, that is some part of 10% of the CSR or certain percentage of the CSR can be allowed to route it through the
Stock
stock
exchange.
exchange. But it is not yet come into the notification. It might take time. Like ATG also come into the picture after 1-2 years. Before that, ATG is also not allowed because they mentioned it is pure play of the social intent. So whosoever wants the social welfare, he has to subscribe it. But now they have relaxed that. Sooner they will relax the CSR norms also. But you have the indirect benefits. The moment you are a listed company, you are known whenever you will go to any company in the India or in the world that okay, boss, we are listed on the stock exchange also. We are a transparent company. We have a good governance. That itself give you the credibility. It's just like that today. Your NGO who is not even ATG registered, मैं ऐसे बात करता हूँ अगर आपका NGO ATG registered भी नहीं है, in that case, it is like a partnership firm, proprietorship firm. If it is NTG registered, it is something like private limited company. Have some regulation, have some eyes, FCRA. Right? Once you get registered, it will be a public limited company. Right? And when you are listed, it is like listed company. There are crores of the private companies, but listed companies are only 7,000. Out of those 7,000, how much you know? Only a few hands, Nifty 50 index. So top 50. Now, same way with the NGOs, they will list on the stock exchange, but who is giving the edge? The early movers will get the edge. And government is supportive in these cases now. So they are not going to provide you the funds. You have to prove that your project is capable enough where your friends, teams, they have to come up, they have to make your project success. 75% minimum. Like today also, if any financial IPO came in, so pehले 75% they have to make the arrangement. They also have to do the same thing in the stock exchange. Stock exchange is not going to give them any funds. Why I am emphasizing this again and again? This is the first questions came in. साहब रजिस्टर कराने से लिस्ट कराने से पैसा आएगा क्या? आप पैसा लाके दोगे क्या? No. Your project should speak, and 75% you have to arrange, minimum 75% upfront you have to arrange with discussion with the donors that this is the project, this is the KPI, this is the measurable impact we have. There is a 130-page, 200-page document, fundraising document, like an IPO document, where all the things of your NGO is explained. What are the risks involved in implementation of the project? इस आप लोग सोचते हैं कि सिरदर्दी है. It is not a सिरदर्दी. It's the advancement. It's the more transparency, good governance. We know we are the owners. Today also only I am sitting with an organization who said कि वो हम खर्चा करेंगे, कागज संभालेंगे. For me it is important that उन गरीबों को खाना मिल जाए. For me it is important women empowerment हो जाए. So अगर मैं 100 रुपए खर्च रहा हूँ, I will spend 100 rupees fully. And even if someone is giving the money, they will ask that this 100 rupee, are you spending fully on the school or not? Fully on the poor children or not? No sir, we are spending only 80. 20 का क्या करोगे तुम? 20 sir, we run our offices and have the staff to pay the salary. So मेरा डोनेशन तो 80 रुपए ही गया ना. आज माइंड में ये है लोगों के कि 80 रुपए ही पुअर लोगों को जा रहा है, 20 तो आपकी जेब में जा रहा है. It's not like that. We have to educate them. We have to aware them to feed those 80. To make those power 80, we have to spend 20 on the salaries of the
Right.
persons.
Very good point made, Rakesh. Very good point made.
Right. So we have to make this awareness among the people that your 100 rupees, that 20 rupees also going indirectly to those 80 people. And
Yes.
I from those 80, and that is what the beauty of this FFRD document also, when you are giving the clear cut spend. So you are saying that okay, my admin expenses are 40%, another NGO admin expenses are 30%. It means they are running more efficiently. They are managing the work more efficiently. We have done one impact assessment. I am sharing the stories also in between.
Yeah.
And then because being time is limited, so but I am trying to cover all the topics. So I'm
Yeah.
telling the story. Yeah.
Yeah.
So and uh, NGOs, one enrollment of the education girl. They are educating the girls and they are enrolling it to the schools, helping the government to the schools that they have done the listed projects. In that case, now what is the impact they are creating on the society? What is the social rate of investment they are giving? That we have calculated that every 1 rupee spent returns in long term more than 15,000 rupees to the society by educating, by enrolling one girl to the school. Because if that girl crosses the 10th class only, middle class level, their poverty rate, their marriage will be late, their child ratio will be less, health will improve. So all the index is given in the UN. And when you will say this, that you are creating so much impact, so we have adjusted that also. That okay, that is organization is not only doing, government is also doing for the education of the girls in those areas. So we have given only 10% weightage to that organization. So it means that you are contributing, your 1 rupee spent is returning to a society 1500 rupees. So that is what the impact of your 1 rupee donation. That is the one part, right? Second, what how efficiently you are managing the show. Is they are governed by different laws. So no benchmark is there. SSC will give them the things. This is the slide which after this we can end up. There is a lack of awareness. NGOs are thinking compliance versus benefit. What is whether we have to do more paperwork and what is the benefit? That standardized framework of accounting and reporting is not there. All the NGOs are being governed by the different acts, Societies Act, Trust Act, and the Companies Act. They have the different framework of accounting. So it is difficult to compare it. But we can bring up more and more transparency by capacity building of the social enterprises. We have to build the SSC ecosystem so that more and more transparency can come. As I mentioned, the funds can be raised through the NGOs. NGO can raise the fund by ZCZP bonds. Mainly, these are the things which are coming out where donors will come. You are not to pay the interest, but they will get in the their demat account. So that is the points which I want to mention. And the social impact assessors, how they will come up, that your impact has been assessed by a third party that will give you the edge that we are audited, our impact assessment has been done by a third party, not by us only. So, and that is a qualified and regulated body governed by the regulator. Like एक चार्टर अकाउंटेंट की ऑडिट का साइन का कीमत है, the same way the impact assessment report signed by the impact assessor has the same weightage, rather than we are doing this some development agency or the development sector, you are getting the impact assessment reports are there. But if you are getting it from a qualified person, it will have the more weightage than anyone else. That's one. Now we can take the sessions, ma'am. If
Yes.
you
For that, I would like to add 2 points to the new thing that is coming up in 2025. Is I think the NGOs have, apart from the fact that Rakesh talked about compliance and benefit, there's one more mindset change that the NGOs need to look at, is that you have to understand that while you're doing a lot of positive impact, the SSE asks you to identify the negative impact also. Yeah. So this is something that is not very common. It's a new thinking that has to come in, that you have to acknowledge that not everything that you do has a positive effect. There could be some negative effects also, negative impact. And that is something that the fundraising document will ask you to acknowledge. As long everybody understands that, as long as the positive impact is more than the negative impact, your project has been successful. But this is a concept that you will have to start understanding better, about the fact that acknowledging negative impact. Another thing that you need to understand, a new concept, is you need to understand that there is an issue of risk. Yeah, like the way you would invest x amount of money in the BSE or the NSE, you're always aware of the risk of your fund money getting a return. In the social stock exchange also, they ask you to, if you're listing on a social stock exchange, they will ask you to identify the risks of all the things that can go wrong with your CSR project. Yeah, so these are the two things where we will discuss it at another date, because this by itself is a 2 hour session. But I open the floor to the questions that you might have. Log in for that also. If there's something specific you want us to talk about, please get in touch with us. And please do visit our website, drop in queries, get in touch with us for more discussion. And thank you so much for your time. Yeah. Thank you, Rakesh ji.
thank
And
you, ma'am. Thank you.
thank you.
Thank you very much.